Good morning, winners. Welcome to Terry's Tips. Happy Tuesday. I hope you are having like a super amazing week so far. Today, I'm going to talk to you guys about how to establish revolving credit history the right way. And I'm going to give you some do's and some don'ts. So some things that are going to help you get approved and help you establish credit history, and some don'ts, some mistakes that I'm seeing many of you guys make, and some things to avoid so you don't try to establish your credit history, build your scores, do better, and do things that are actually hurting you even more. Okay? Look, got it good? So please, go get a notepad, go get a pen, because throughout this entire video, I'm going to be giving you some tangible items, some places that you can go, some things that you can do that is going to help you on this journey. Okay? So first, if you are new to my channel, welcome. I would love for you to be a subscriber. My name is Terry. I am a self-employed entrepreneur. I am a mother of three sons, and I own a consulting firm that we focus on business credit and personal credit, but heavily on entrepreneurship, heavily on home ownership, heavily on investing and real estate investing, to be specific. And so when I started my channel, the goal was to educate, and empower you guys so that you have the tools, the knowledge, the resources to do some of this on your own. And also, so you're not making like costly mistakes, costly like money-wise, costly like time-wise, by some of the inaccurate, like wrong, false, bad information that's out there. So it's really about breaking generational cycles of poverty so that we can lead by example, so that we can have a better lifestyle, so that we can have legacy. Look, like, amen. So I would love for you to subscribe, like, share. I upload videos every Tuesday and Thursday. Free tips to help you get to your goal. So let's jump right in. So first, revolving credit history. If you are trying to raise your credit score, if you are trying to build credit, having open, available, revolving credit history and managing it, look, this is the key, guys. Managing it the right way is a great way for you to kind of build your score, for you to reestablish credit history, for you to look credit worthy on paper for lenders to approve you. Now, mind you, if you're following my channel, that means you're looking for the big money. So we're looking to transition into business credit. We're looking for first-time mortgages to help first-time home buyers. We're looking for investment loans, commercial loans, conventional renovation loans. So we're looking for things that are 100,000, 200,000, 300,000, a million, like the big money. So guys, you have to establish the foundation the right way for lenders to want to then say, okay, you are credit worthy on paper for us to give you a $200,000 loan. Okay. So some of you guys, and look, I'm just going to say, you guys know I'm real on my channel. So I have a lot of people that follow like Dave Ramsey and other people of that nature who is, listen, wildly successful, super smart, a lot of great things you can learn. Usually if you're following a channel like mine, you're going to be following other people in like the financial world. But I want you to understand something, and I need you to get this in your mindset, that Dave Ramsey is speaking to a percentage of people. Okay, everything is relative to what's going on in your life right now. If you don't have any assets, you've never started your business, you don't own any real estate, you don't want to pay off and close everything and then try to apply for loans. Look, guys, I'm trying to free y'all today. I really am. Because I have people, I get it. Yes, getting out of debt is smart. But if you follow me and you're one of my Make Real Estate Real people, we talk about actually using your credit as a tool for leverage to build wealth. So you don't necessarily have to pay off $20,000 worth of credit cards. What you're going to do is get your credit where it needs to be, get your down payment money, and you want to get an income producing asset, a duplex, a triplex, a flip, whatever it is. And then your asset, your asset that's income producing, cash flowing, giving you additional tax write-offs, your asset is going to pay off your debt. And this is the best part. After it's paid off, keep on paying you. That's how you build wealth. That's how you build legacy. That's how you truly leverage. So the reason why I'm saying that is that a tip. So one of the very first tips is, if you have revolving credit history and you still, this is the key, guys, need to use your credit to qualify for mortgages, business loans, renovation loans, construction loans, commercial loans, whatever. You don't want to close all of your credit cards. Yes, you can pay them off, but you can have revolving credit history be a zero balance and not close it. I literally have some of you guys that have done amazing work rebuilding your credit, and then you've closed all of your credit cards. And then when I go to pull your file to approve you, and when lenders do, you're at like, I've had people at a 450. Like, no lie, 500, where they're almost starting from ground zero because everything is closed. So there's nothing to kind of kickstart the FICO scoring model to actually generate a score for you. So in the season where you still need to qualify for funding, period, you need open available credit to build your score. Then yes, once you have a couple of properties, once you have your business, once you have other items, credit may not be as much as an issue. But while you're building your empire, if you are going to need financing to help you build and grow, then you must play this credit game, okay? You must leverage it. You must look good on paper. You must show credit worthiness. So let's talk about if you have bad credit, okay? Bad credit, and or you have no credit at all and you guys are trying to establish. Another don't. So a don't that I see you guys doing is applying for everything, applying for a bunch of credit cards, getting a bunch of denials. Now your score is even worse. You have no credit cards, and I just did that inquiry video, guys. You have a bunch of hard inquiries that bring your credit score down even more. No. So let's talk about how to do it the right way. So first, I promote and I put it out there so you guys can get access to it. A credit builder card. Now, why is it a credit builder card? Because it's a soft inquiry. That's number one. Number two, because it reports to all three credit bureaus. If you watched my Credit Karma video or my Experian Boost video, you know that I do not endorse services that don't use a FICO scoring model, and also that aren't products that report to all three bureaus. So when you are being strategic, and my channel is very much about strategy when doing credit, that's what helps you get a better result in a condensed time frame. You always, write this down, want to be using financial products that report to all three credit bureaus. The credit builder card that I talk about is a soft inquiry. That's a benefit. It reports to all three bureaus. That's huge. That's especially what you need for real estate financing and for business loans. And number three, it's an automatic approval as long as you have a valid checking account or savings account. It's just a $200 security deposit. Guys, the credit limit amount at this point when you're at ground zero or you have really bad credit and you need to build, get some positive payment history and rebuild your score, the credit limit is irrelevant. What goes into the FICO scoring model, remember this, write this down, is that you have open available revolving credit history and that it's your own. It's a primary account. So it's not an authorized account. So that's smart. So sometimes you need to start there, get that on your credit report for at least 3 months or so. 3 to 6 months is better, but at least 3 months of reported payments to kind of build something. And then you can start with other credit cards that may be unsecured. So another tip, just because, and this is a big one, guys, because you guys are making this mistake. Just because something is a secured credit card, that does not mean it's an automatic approval. I know. Now, first of all, I really disagree with this. I feel like if you're giving a bank a security deposit, there's no reason why they should deny you. But yes, Wells Fargo, I'll give you some examples. Wells Fargo, Bank of America, Discover, Capital One even, they actually have secured credit cards that promote rebuilding for bad credit. And I've had people go apply for them and still get denied. Yes, I know. That's why I'm doing this video, because now you didn't get the credit card and you got a hard inquiry on your credit report for 2 years. And we talked about how excessive inquiries bring down your score and how also excessive inquiries kind of hurt your chances of getting approved for funding for business credit. So you also, the secured card, so this is why I said start with the credit builder card, get that on there for a couple of months, and then just know that just because something is a secured card, that does not mean you're approved. Okay, so stop applying for every secured card you see. Doesn't mean it's automatic approval. Another tip, so something you can do, is pre-qualify. Write that down. So a lot of the second chance cards or the cards for bad credit, they have, and you usually have to Google it sometimes to get to the right page, a pre-qualification. What that means is that it's a soft inquiry. So you'll see where it says, see if you pre-qualify for credit 1 with no impact to your credit. When you see where it says pre-qualify and no impact to your credit, that actually means that they will check for you as a soft pull. Guys, that's a huge tip. Write that down. So you can do pre-qualify First Premier, pre-qualify Capital One, pre-qualify Credit One, and see if you apply, if you actually qualify. If you qualify, then you can formally apply and go for it. If you don't, then don't. You know you need to do more things in your credit card, on your report, to even just qualify for a regular credit card to rebuild. Some of these second chance, some of these cards for bad credit. Okay, so pre-qualify. That's a huge one. Another thing I want you guys to also realize. So I've had a couple of people where, they need to establish credit history, and we've helped them with their credit card, or they've gotten a second chance card, or some of these subprime, banks or so forth that will give you guys a chance. And I had people say, well, the interest rate is high, or I don't want to pay the annual fee. Guys, I need you to change your mindset. You have to crawl before you walk. So yes, absolutely, these second chance cards, these credit builder cards, these subprime kind of lenders or whatever, sometimes they have high interest rates, sometimes they have annual fees, sometimes it's not the best terms. Look, transparency, 1,000%, but nobody else will approve you. They take on higher risk clients and consumers. So that's one reason why they're very strict about how you can pay them. They're very strict about having a high interest rate. They're very strict about if you have a late payment, maybe closing your account, because they're already approving credit for people that other banks, the American Expresses, the Discovers, the Chases won't approve. So just know that yes, sometimes you have to take things that are not the best terms for a period of time, guys. This is a tip. You have to change your mindset. It's literally just something to help you build to get to the bigger money. You have to reestablish. Now, another tip when you guys are telling me, well, I got this First Premier card, or I got Credit One and it's a high interest rate. Nobody said max it out. Nobody said carry a balance every single month. Guys, use the card for gas when the bill comes in, pay it in full. Use the card for Uber Eats when the bill comes in, pay it in full. Use the card for your gym membership when the bill comes in, pay it in full. Stop. You guys are getting hung up on the small things that is keeping you from getting to your goal. Look, I don't make the rules. The people that are giving you the big money, they want to see you at a 650 or above. Really and I always say I want you all to have a goal of being a 680 or above, so that you qualify for all types of credit, and so that you can really build legacy with the bigger money. We're not talking about getting a car. We're not talking about getting a personal loan. We're talking about legacy and wealth building. So yes, you have to sometimes take, if it's something that has a high interest rate, if it's something that has an annual fee, just know that because you will have no credit, because you have bad credit, because you're reestablishing, you are a high credit risk to the lenders. So sometimes they do have not great terms. You just need to do it for a little while to build your credit. Then you will qualify for cards that have better terms, higher limits, and everything is easy breezy cover girl. I'm so extra. Okay, so another thing is some of the credit card companies that are subprime, meaning that they will approve you with not perfect credit. I want you to write some of these down. So Credit One has credit cards for not great credit. First Premier has credit cards for not great credit. Capital One has credit cards for not great credit. Even Open Sky, even Indigo, even Milestone on MasterCard, even Surge Card. So you guys can just Google these. First Premier, Credit One, Capital One, Milestone MasterCard, Open Sky, Surge Card, Indigo Card. Yes, not the great terms. Yes, sometimes high interest rate. Yes, sometimes annual fee. It's just for a season. But if you do it the right way, meaning get your credit builder card, guys, there is a link tree I put in this video. It's also on my Instagram. It's on my website. It's on my Facebook. It literally says credit builder card, and then credit builder Then credit builder, what's that? A self-lender account. That's installment credit. We're not talking about that today. Today is just revolving credit history. You can click on that. It will take you to the website. So sometimes if you really don't even qualify for for those cards, start with the credit builder card, pay it for at least 3 months, make sure it's reported on your credit file, keep the utilization low, and then apply for some of these other cards. Sometimes you managing that $200 card for like 3 to 6 months means that when you finally go to Capital One to pre-qualify, you get $500 or $1,000. Guys, the way you do things can actually help you, or it can hurt you, because if you get all those inquiries, then you maybe could have qualified for Capital One, but now your inquiries brought your score down, and now you're kind of like in a vicious cycle. Okay? Another tip for you guys, the way you fill out your application. Some of you guys are getting denied just because you're not filling out the application correctly. So if you have credit challenges, and listen, no judgment zone. People legitimately never learned about credit, have grandparents and parents that tell them that credit is the devil, don't know financial literacy, have had a layoff, have had a divorce, have had, a car accident, have had a medical hardship. People legitimately have had life situations that have impacted their finances, which then impacts their credit. So listen, you'd be surprised. I have clients from all walks of life, some that make a lot of money, some that make a little, and they all have credit challenges. But what I need you to understand is that you have to start from somewhere to rebuild, and that's what this video is about. And so for this application, right, you're considered a high credit risk. You have credit challenges or no credit for whatever reason, right? I don't care what the reason is. We're trying to get you free, okay? Financially free. So when you're filling out the application, the income, the amount of years you've been at your job and being full-time, being employed full-time or not, are things that, guess what? Look, come closely. It's not on your credit report. They're using the information from your application. So yes, if you have bad credit and you put that you're unemployed on your application, you're going to be denied. If you have bad credit and you put that you work part-time, work part-time wherever, Giant, UPS, wherever, I don't care where, just part-time, you're going to be denied. If you have $200,000 worth of student loan debt and credit cards and charge-offs and repos in your credit report, and then when they ask you for your income, you put that you make $1,000 a month, you're going to be denied. If you put on your application you've been at your job for 2 or 3 months, you're going to be denied. So just understand that you're applying for things already with you having credit challenges and already with you kind of needing to rebuild. So when you fill out the application, always fill out your gross income, okay? You can even do your household income. Maybe there's 2 of you in the house. So instead of you just saying you make $30,000, say you and your girlfriend, or you and your husband, or you and your wife. Say together you guys make $60,000. So put on your application $60,000 because that's the household income, okay? Say you have a full-time job and you do hair on the side. You're a barber on the side. You're a landscaper on the side. Say you bake dinner, have dinners, whatever it is, and you get extra income a month for that, $1,000, $2,000. Include that. Say you get child support or alimony or something like that. Include that. Go by your gross income instead of your net. Your goal is to show the most income on the application, also to show that you're employed full-time, and they really do like to see that you've been at your job more than 2 years, 3 years is even better. So if you've been at your job 3 years, 4 years, 5 years, then that works in your favor. So sometimes you guys could have been applied, but because you work part-time for 3 months and you make $200 a month, then you're getting denied just because of you, just because of what you're putting on the application. So be smart. You want to show good, strong income, good, strong employment information when you're filling out your application, okay? And you want to make sure that it's relative to the debts on your credit report, okay? That's a huge tip, because some of you guys are just being denied because of you. The next thing is utilization. So I want you to keep your credit card utilization at 20% or under. Some places will say, in general, 30% or under is good. 10% and under can sometimes get you more points. What the theory is is that the areas that we can control, you can control your credit card utilization. If you have bankruptcy, foreclosure, late payments, repos, and you've done 10,000 dispute letters and things are still in your credit file, you want to start with the credit builder card, then pre-qualify after a couple months of payments for some of these other credit cards, get open and available credit history to at least start raising your score and establishing while you're still working on those negative items. But you want to make sure that like you're doing it like right away, and you want to make sure that you're keeping your utilization low because that's something you can control. So be more aggressive. This is a strategy, guys. Write this down. The things that you can control, hard inquiries, the things that you can control, open available credit, the things you can control, your credit card utilization, be super aggressive there to offset the negative credit. So if you have $1,000 credit card, I want the balance to be no more than $150 or $200. Okay? Like in your mind, even though the credit card is $1,000, in your mind you have a $200 credit card, and I need you, another tip is I need you to use it. So some of you guys have trauma over credit, you know what I mean? Or you don't want credit cards, but you do want mortgage, you do want construction loans, you do want business loans, so you have to show that you can manage revolving credit history. Then I need you to use it. Some of you guys get these credit cards, you throw them in your drawer, you're not using them at all. It completely defeats the purpose. In your mindset, you are building positive credit history to build up your score to show that you're credit worthy, okay? And so right away, what you want to do is use it, wait for the bill to come in, pay it. Use it, wait for the bill to come in, pay it. You don't want to use it on Monday and pay it off in full on Tuesday because you haven't allowed enough time for it to be reported to the credit bureau to actually start building for you. I don't care if you pay the balance off in full when you actually get the bill. That's fine. But just you still need to keep on using it to build up credit history. And the last tip is really, lenders like to see 24 months of payments. Now, there's not anybody I've talked to where I've said you need 24 months before you actually apply for a mortgage or so forth, depending on what else is on your file. But 6 to 12 months is a good time frame. Like, you can't have bad credit for 7 years and then pay a credit card on time for 3 months and expect to be like at a 700. I need you guys to have patience. Please, it took some time to have the credit challenges. So for the bigger money, to qualify for the bigger money, you need to reestablish. And sometimes that does not happen super quickly. I give you a bunch of tips to help you fast track it. I give you a bunch of tips to help you not make mistakes. I give you a bunch of tips to use strategy and get there in a condensed time frame. But if you have no open available credit history and bad credit, you may need a good 6 to 12 months of payments at the very least to reestablish, build your score to look credit worthy to the lenders who are going to give you the big money. Okay? Got it good? So let's recap, because that was a lot. I talked about, not paying off your credit, like when you have your credit cards, not necessarily like paying them off and closing them because you need to still the open credit lines, okay? I talked about the credit builder card. Go to my link tree. I have a credit builder card. You can be approved immediately. It's a $200 security deposit. I talked about after you have that card in your report for like 3 to 6 months, going to some of the other cards. I gave you a bunch of credit card companies that are subprime creditors that actually help people with poor credit. I told you how to pre-qualify. I told you how to fill out your application. I told you how to use the card. I told you why it's important, right? And I told you that you always want to use financial products that report to all 3 bureaus. Got it? All right, so I hope that was super helpful for you guys. This is a big thing that I'm seeing still in your credit reports. You guys are focusing so much on getting negative items deleted that you completely miss building up the positive payment history, and that's why your score is not moving. So just know that building up the revolving credit history is going to increase your score. Okay, so I hope that was helpful for you guys. And listen, like I know it's a lot of information and I joke around a lot, but really, like, if you're new to my channel and if you're not, when I say that I bought my very first house at the age of 21, and because I was a teen mom, because I was in foster care, because, I didn't have any family support, like me learning how to look good on paper and leverage has honestly changed my life. And this is one reason why I'm so passionate. I actually try to give you guys really, really, really good information, detailed. There aren't other videos out there that are 25 minutes talking about how to rebuild your credit, but I give you a ton of information for free because I want to see you win. And because it really is about breaking generational cycles of poverty. And because in 2020, you guys have an opportunity to leverage looking good on paper that are our grandparents, our great-grandparents didn't have. Some of these laws, like the Fair Isaac, like I said before, was just started in 1956. They just started really using credit scores heavily in 1989. So other people in our older generations didn't have the opportunity that we have. Stop wasting it. Put it into things that are income producing and build your legacy. And then you know what the very next thing you do? You teach somebody else. You teach your kids. You show them the right way from the very, very, very beginning. So together, your whole family, generations, multiple generations, can be investors, can be business owners, can be multimillionaires, can be financially free for the right reasons and doing the right thing. Amen? So I hope that was helpful. Subscribe, like, share this video with somebody, tag somebody, comment and let me know if this was helpful, and have a super amazing day.